So, hi friends, today we are going to discuss the concept of final accounts. What does it mean by final accounts? And why the entity will be preparing the final accounts, and how the entity prepare final accounts, and what entities prepare the final accounts. Of course, we already know that all entities means like business form of organization, all are going to prepare the financial statements. Final accounts are also called as financial statements. They're also called as financial statements. Okay, when do the entity prepares final accounts? At the end of the year, the entity prepares the final accounts. But which year, sir? Either the period that should be neither too small nor too large. That means neither too small means if the entity wants to prepare the final accounts every week, that is a burden for the accountant to prepare the final accounts. If they want to prepare for 3 or 4 years, after 3 or 4 years, that would be more long, because they are not going to manage, they are not able to, they will not be able to manage the profits of the business. So in that case, they are going to take a fixed time of span of 1 year. That 1 year may be either financial year, either that may be financial year, or that may be calendar year, or any year. Financial year means April to March. Calendar year is Jan to December. Okay, that may be either April or March, or January to December. April to March or January to December, or they may take any time of 12 months actually. This 1 year implies 12 months. Within 12 months, they are going to maintain all the books of accounts. Why? They are going to start with the journal actually, and they are going to prepare the ledger accounts, which are going to be transferred to trial balance. This is the most important statement, which gives arithmetical accuracy. And all these balances, debit or credit balances, will be transferred to final accounts. Very important topic actually, what we can say, because with this final accounts, after preparation of final accounts, the entity can decide whether they are going to run the business for too long or too short. Okay, and whether they can decide, the decision making is very important. With the help of final accounts only, the decision making is possible. So they are able to know the profits of the business, that profits or losses incurred of the business during that year, but and also they are going to know the financial position. Okay, they are going to know about the financial position. So there are two types of entities actually. I'm not yeah that those are profit motive and non-profit motive. There are two types of organization. These are called as non-profit organizations. These are also called as Section 8 companies. But now we are going to discuss only about the Profit motive organizations. Okay, profit motive organization. This is according to Companies Act 2013. Okay, profit motive. This profit motive is again classified into two types. Those are trading concerns and manufacturing concerns. Trading concerns and other one is manufacturing concerns. Very very important. Trading and manufacturing. Okay, and here in this topic we are going to discuss what are the accounts that will be maintained in the trading organizations, and that means trading concerns and also the manufacturing concerns. Let us now discuss them in depth matter. Okay, let us start. So now first of all let us discuss about the trading concerns. They are going to maintain three types, three books, not books actually. They are going to maintain three things. Those are trading account, profit and loss account, and also the thing balance sheet. These two are called, that means trading account and profit and loss account are called as income statements account. Income statements, that means through which we can know the how much expenditure incurred, that means how much direct expenses incurred and indirect expenses incurred, through which we are able to know the profit or loss of the business for that year only. That means the trading or P&L account can be prepared only for 1 year. But this is the main thing, which is balance sheet. Balance sheet gives us the financial position. Balance sheet gives us the financial position. But the financial position is not only for that year, that is group of years actually. Financial position. Uh, in this context, we can able to know that if the firm earns profit, if a firm, 1 minute, if 1 minute, if a firm earns profits in the current year, it doesn't means that it is financially good. And vice versa. What does it mean? With the statement we can know about that it doesn't mean that if entity earns the profits, it doesn't mean that it is financially good. That means financially good is nothing but all the capital is holding all the assets. What does it mean by capital? You know already, right? Capital, it is the investment made by the proprietor. Actually, it is the investment made by the proprietor in the business. That is what we can mean by capital. Okay, capital is pooled by all the assets. I'm sorry, assets are all assets are pooled by the capital. Okay, we can know about this assets and capital later. That means there will be more there is with this statement you can able to know that if the entity earns profits or losses, it does not decide whether the company is financially good or bad. Okay, that is what I wanted to discuss with you. Now let us discuss about manufacturing concerns. Manufacturing concerns. These manufacturing concerns are going to maintain four things. The three things are common: trading account, profit and loss account, and also the balance sheet. Those are common. In addition to that, they are going to maintain manufacturing account. It is going to maintain the manufacturing account. Okay, this is most important for manufacturing concerns. We are going to discuss in detail about these both trading and manufacturing concerns. First of all, let us see the format for trading account. We shall discuss about manufacturing concerns later, but we shall now discuss about trading concerns. Okay, the trading concerns are going to prepare trading account, trading account, profit and loss account, and also the balance sheet. Okay, let us now see the format for the trading account. Okay, manufacturing trading concerns and manufacturing concerns. First of all, let us discuss about the trading account, and here we are going to write the debit and credit. I am now drawing a T-shape format actually. 1 minute. Okay, trading and manufacturing account here. This is debit side and this is credit side. The heading which we write here is trading account of so and so association for the year ended, and the ended which is the year ended which will be given in the question only. Okay, that we are not going to discuss. Okay, that would be given in the question. But of course you know the inner column and outer column. Okay, here in what we are going to record in the trading account. The trading account records all the direct expenses and all the direct incomes. I repeat, trading account maintains all the direct expenses and also the direct incomes. What are those direct expenses? If any closing stock is there in the last year, that would be becoming the opening stock. So we are going to write to opening stock with some value, okay? And if any purchase is incurred, and if any returns were made minus sale, sorry, purchase returns, less, we are going to write here less actually, purchase returns, and outer column we are going to write in, this is what we can say it as net purchases. Okay, to purchases less returns, here in credit side buy sales, and minus if any returns are made minus sales returns. So this purchase returns is also called as return outwards. Sales returns is also called as return inwards. Return inwards, okay? And now these are the main things, and here buy closing stock. Closing stock will be available in the adjustments. If that is available in the question, that would be given in the question actually. Okay, we are going to discuss about these adjustments in detail later. First of all, let us understand the things which we are going to maintain in the trading account. Okay, first of all, to opening stock, to purchases less returns, and buy sales and closing stock. Okay, now what? To octroi inwards, freight inwards, carriage inwards, to wages, factory wages, as this is direct expenditure which is made by the entity for factory workers. Okay, and next one is, so these are the main things which we are going to write in the trading account, and the balancing figure would be gross profit. This is what usually the firms get gross profit, and if this is the, if the credit side is more, if the credit side is more, the firm get the profit. What is mean by credit side here? Those are got revenues. Revenue is greater than expenditure, then that would be savings in usual language, but here in terms of entity, this is gross profit. Okay, so these are the normal expenditure, direct expenditures which the firm maintains. Okay, so now I'm going to discuss about the different types of direct expenses which the firm maintains. Okay, those are customs duty, fuel, oil, excise duty, not exercise duty. Okay, insurance on purchases, power, production expenses, factory expenses, royalty on production. These are the direct expenses which the firms incur. Now let us discuss about the profit and loss account. So this is the format for trading account. Now let us discuss about profit and loss account. One minute. One minute, friend. Yeah. And this is debit side, this is credit side. 1 minute. Okay. This is debit side and this is credit side. And the gross profit which is there here, this would be transferred to profit and loss account, credit side. Profit and loss account, credit side. That means this would be the opening figure for profit and loss account. Same heading, same type of heading, profit and loss account for the year ended. The ended date will be given in the question. Okay. By gross profit. To indirect expenses. To indirect expenses, and the balancing figure would be to net profit. This is what balancing figure, and this would be transferred to capital account in balance sheet. Okay, this the balancing figure would be net profit if the credit side is more than the debit side. But if the firm has more expenses, that is in debit balance is more, then the firm get net loss. This is again transferred to capital account because the profit or loss will be borne by the proprietor itself, as we are discussing about sole proprietary form of business. Okay, and I am going to give you the list of the indirect expenses which the firm incurs for trading things. Okay, what are those now? First of all, I am going to give you the list of management expenses. And the next one are maintenance expenses. And the third one is selling and distribution expenses. selling and distribution expenses. And next one is financial charges. Financial charges. And next one is abnormal losses. Okay, these are all the indirect expenses, and we shall also discuss about the incomes. The first and most the main income would be sales. Okay, and we are also having other incomes which would be appearing which in the trial balance and that are taken into the profit and loss account. Okay, and non-trading incomes, and abnormal gains. Okay, after giving this, we shall discuss in the next class what would be how do how do the firm maintains the trading P&L and balance sheets. Okay, let us now discuss. First of all, management expenses. Those are salaries, rent, rates and taxes, insurance. Fourth one, telephone charges, postage and telegrams. Postage, printing and stationery, printing and stationery, traveling charges or traveling expenses, legal charges, legal charges, audit fees, general fees or general charges, establishment charges, and miscellaneous expenses. Miscellaneous expenses. Let us now discuss about maintenance expenses. Those are repairs and renewals, and the next one is depreciation. Depreciation. And now the selling and distribution expenses. Those are carriage outwards, commission on sales, packing charges, packing charges, warehouse rent, bad debts, provision for bad debts. Okay, these are all the selling and distribution expenses, financial charges, and abnormal losses. What are these financial losses? Discount allowed, discount allowed, bank charges, bank charges, interest on loans and advances, interest on loans, overdrafts, interest on overdrafts, and the next one is discounting charges. Okay, and next one is abnormal losses. Those are loss on damaged goods, loss on damaged goods, loss by fire accident, loss by theft, loss on sale of investments or assets. Okay, loss on sale of assets, investments, loss on sale of assets, investments. Okay, these are all abnormal losses. Now let us discuss about other incomes. Other incomes is nothing but discount received, commission received, okay, non-trading incomes, interest on deposits, interest on deposits, dividends, rent, not income, rent, actual rent, income from investments. These are all non-trading incomes. And what is abnormal gain? By profit on sale of fixed assets. 1 minute. Profit on sale of fixed assets, profit on sale of investments, okay, profit on sale of investments. And abnormal, very important gain is bad debts recovered. Okay, and now within 2 minutes let us discuss the these all incomes one minute. These are all the incomes. These are all the incomes. Okay. and these are all the expenses which the management incurs. Okay. Okay, these are all the expenses. And lastly, the main important one, which is balance sheet. Balance sheet, the main important one. Balance sheet is prepared on the date, on the only one day only the balance sheet is going to be prepared. So we are going to write that balance sheet as on so and so date. Okay, this is not an account, this is a simple statement, and in this there are going to be two different methods, which is rigidity preference method, and also that liquidity preference method. Rigidity preference method and liquidity preference method, but we are going to use only the rigidity preference method. That is, all the long-term borrowings or long-term liabilities are going to be recorded as assets on top side. Capital is a long-term permanent liability for the firm or for the business, but not for the member, that means the proprietor. Capital is always payable to proprietor, so this is a long term liability. Okay, capital, and if any, so here I'm now going to discuss the format of the balance sheet here. Okay, all the liabilities are recorded on the left side. So here all the liabilities, and here all assets are going to be recorded. And in this rigidity preference method, we are going to record first of all capital, and if the capital is there, and if any drawings are there, we are going to less the drawings. Okay, you are going to less the drawings, and we are going to add net profit if any profit is there, and we are going to less with net loss if net loss is there. Okay, and the whole answer will be recorded in the outer column. So this is the thing. And fixed assets, here in topmost priority, fixed assets are recorded on the top side, and the investments which are made, that are going to be recorded here. Investments, here dividends, if that is of use value dividends, investments, dividends are going to be recorded in middle, and at the last current assets. Current assets are going to be recorded. Okay, and here in between the long, not in between there will not be anything, and here they are going to record short term borrowings. Okay, like sundry creditors. Okay, bank overdraft, etc. Okay, these are the things, and also the bills payable, etc. And let us see the in fixed assets. The main thing is goodwill. This valuation is very important for the business. The goodwill, land and buildings, plant and machinery, furniture, and motor vehicles. loose tools, etc. Okay, these are all the fixed assets. And investments and dividends we are going to record here in middle. And what are the current assets? Stock in trade, closing stock, sundry debtors, okay, bills receivable, cash in hand, cash at bank. Okay, these are all the simply the primary things which are going to be recorded in the balance sheet. And one more thing I have discussed is balance sheet will be saying as the financial position of the business. Okay, and the trading and P&L account will be disclosing the profit or loss of the business. Thank you very much for watching. Thank you very much. Bye.